So how much cash have you got today, and what are these listed options potentially worth?
So we have around 3 million in just now, and the options, if all exercised, will bring in about another 7 at year end.
Okay, and what's that allow you to do, or what's the plan with that?
So that allows us to continue exploring for at least a couple of years without needing to go to anybody else. Yeah.
Right. So, but how does it break down? I mean, are you doing more sort of 2D? Are you going to be doing 3D? You know, how much more drilling? What are you targeting and hunting for first?
So we think 3D is really something that is for the future. It's really a development tool in coal seam gas. So we will do more 2D, and we'll do more of the various types of wells that we've been doing. So we've to date have drilled fully tested core holes and then cheaper stratigraphic holes, which are basically there to confirm coal at depths. Next year, we will follow up with a production well in the area of our existing discovery, which will look to produce gas to surface. And if the flow rates from that are above a certain point, then we'll have started to prove that there's reserves in the immediate area there. The seismic that we shot to date over 2 years has given us more exploration targets, which we will follow up this year and next. And as and when they come good, then we'll follow up with core holes, and we'll follow up with production testing holes. So it's really a rinse and repeat process, starting with 2D. And also we drilled some wells even without seismic, because we've got surface expressions of coal. And indeed, that's what we drilled upon in this Nomgon sub-basin area successfully. So it's a mixture of tools, nothing too complex in oil and gas terms, certainly.
That's interesting. So you drilled on the basis of coal expressions at surface, and well, define successfully. When you say we drilled successfully, what does that mean to you?
So the exploration well, Nomgon 1 that I mentioned earlier, the parameters that it delivered to us when assessed against an international standard called the Petroleum Resource Management Standard, or PRMS, was deemed to be a discovery. I mean, it ticked all the necessary boxes to do that. Now, it was a localized discovery, and so the immediate contingent resource you could book from that will be bounded by the area. But what it indicates also is the risking applied to making further discoveries elsewhere in the area the size of Belgium are less than they were before we had done that.
Okay, so given that your end goal here is to find a strategic partner with the right size balance sheet, and presumably either to farm out to them or to just use their money. I mean, how do you see that relationship going forward? Do you want to stay involved, or is it time to check out?
Well, I think that would really depend upon the situation at the time. I mean, I think it's often dangerous for juniors to stay in too long because they want to be producers, because they're engineers or whatever. And if they have a critical financing issue, then they can lose everything. Handing over the whole lot is probably the optimum thing to do from a risk management perspective for shareholders. But we obviously will assess that from time to time. Interesting to draw upon the experience of our chairman. He's pretty well known in Australia. He ran a junior coal seam gas company called QGC, and it fended off a takeover from one company, Santos, I used to work for. It brought in a strategic ally called AGL. It ultimately was bought by Britain's British Gas Group. And so there was a lot of dealing with the optimum outcome at the time, rather than falling over to the first person who offered him a dance.
Right. Okay. So, given that's the end game, and you've got your $10 million, you told us how you're going to break that down. I mean, what sort of time frame are your very excited shareholders looking at for that event to happen, or for you to start thinking about something like that?
Well, I think that we would like at least another 1 or 2 years, 1 year absolute minimum of value enhancing work that we would do ourselves. In the background, obviously, we want COVID to become manageable in whatever shape or form that it does. We want to see what's happening geopolitically. China is the obvious partner for us in some shape or form, but equally it could be a multinational oil and gas company who recognized that China was it when it comes to gas markets. So, for instance, and I'm just saying this hypothetically, Shell now operates what was Richard Coddy's asset in Queensland. It exports coal seam gas to China in partnership with CNOOC. It's one of the premium operators in the world, and it might want to replicate that somewhere else, like where we are just now in Mongolia. As I say, that's only a hypothetical, and we'll see what happens. But I mentioned BP earlier. All the large oil and gas companies, certainly in Europe, are rebalancing their portfolios away from oil towards gas and renewables, and that's something that clearly we are focused on in terms of gas. But also, interestingly enough, where we are is a fantastic resource for renewables as well in terms of sun and wind.
Okay.
And ultimately, those things could also be exported in parallel to gas from where we are.